January 29th, 2024. Today we got a breakout above a wedge and a measure move up. The wedge being 1, 2, 3. I thought in real time we might try and form a truncated wedge. So 1, 2, and then I thought this might be 3 and that we were forming a lower high. My reasoning for that mostly was because 39.40 was really strong. And when you get something this strong, you're most likely going to form a lower high. So I thought we might try and get a lower high and then some sort of reversal. And we did try on 53, but you can see 53 not closing below the moving average. Disappointing. 54, disappointing follow through. So really not good enough to take any of those sells, and bears end up giving up 56 and get a rally. Also, this kind of thing at the end of the day, really unusual. I wouldn't worry too much about missing it. I actually exited my last trade below 63. I was long somewhere in here, and I took a piece off up here, and I just got out of the rest below 63, and then I went to the store and came back and saw this. And that's just kind of the life of trading, is you're going to miss a lot of moves like that, and it's not a problem. I mean, just focus on the trades you take, not the ones you don't. Big bull bar on bull bar 1, but a tail on the bottom and a tail on the top. Really not all that good. For bulls, they had a spike with the gap and they got follow through on bar 1, but I don't think it's going to go that much higher. You're buying in the overall middle of yesterday's trading range, so really not all that good. Follow through on bar 2 is a doji bar, and if you bought above 1, you really didn't want a doji bar as follow through. If you're taking a buy like bar 1, it's rather risky, so you wanted to see immediate follow through and you didn't get it on 2, which is why traders who bought above 1 exited around break even during 3. Pull back on bar 4 to around 50% correction of bar 1. You can see that's where bulls bought. So if bulls are buying 50% pullbacks, they're not buying new highs, which means that this is probably not as strong of a rally as it could be. Bar 5, a bull bar, but if you're buying above 5, you're buying high in a tight trading range and an overall trading range. Really not ideal to be buying. You probably need a good follow through bar on 6 to make the market always in long. And since that's what you need and it's a trading range, you're probably not going to get it. Disappointing follow through, doji bar on 6. Traders buy above 5, disappointed 6, exiting at the market during 7, causing the big bear bar closing near its low. Do you sell below 7? I don't really think you should. It didn't really end up triggering anyways, but I think that it's better to wait for follow through. You are selling towards the bottom of a tight trading range, and we didn't even break out of the day's low. So I think, if you're selling 7, it's pretty risky and you're probably going to get a disappointing reversal. So I think it's better to wait and see if 8 is a big follow through bar for the bears. And if it is, then you sell the close of that. But you can see bulls bought the close of 7, not letting it trigger. Additionally, I thought 7 was mostly bulls selling it along. So bulls see this, disappointed this, exiting here. Some bears are obviously selling, causing this, but I thought it was mostly bulls selling it alongs, which means there'd be even less momentum to drive the market down. 8, a reversal up, but 1, 2, 3. So when you see 8, you got to be thinking it's the start of a third push up. And the bull moves haven't been all that good today. And this is a big bar high in a trading range. So the upside's probably really limited. Disappointing follow through on 9. And you can see 10 tried to break out of this high yesterday, but ultimately failed. There's essentially letting the bulls who bought this high tick out around break even on 9. So disappointment 9. And then another leg up 10, but really not all that good. And then, this is the problem with being long up here, is you get a bar like this, and if your stop's all the way down here, you're just going to get stopped out versus, you have to have a tighter stop if you're going to be buying. You got to find a way to get out before down here if you're going to be buying up here. Because this, buying up here that it's really not ideal. If you're buying the close of 10, it's not ideal. So you have to find a quick way to get out. It's a third push up. And you can see we ended up getting a big bear bar on 11. Disappointment, bulls panicking out. 12, a reversal up. It's more just disappointment for 11. I think there's a lack of sellers on 11. Can you buy above 12? I think, I probably wouldn't. I think if you do, you have to have a wide stop. I think it's probably okay to take the buy above 12 with a measured move stop or something like that. Being willing to scale in below 12 or something like that, because disappointing outside bar happens far too often. And, 12 is a doji bar. It's a bull bar, but it's essentially a doji bar. So it's more of a trading range close. It's true that 8, 9, and 10 were strong enough to get their own second leg. And I think we're probably getting back to the 10 low, but you don't necessarily have to go rush right immediately to it. There's not really any rush to get back to the 10 low. So disappointment 13 outside bar, and then inside bar 14. So IOI on 14. Technically a buy above 14, but you're trying to get back to the 10 low if you're taking the buy, I think. And it doesn't close all that strong. It's more of it's closing below the moving average, which is important, and a tail on the top. And you're buying high in the middle of, or you're buying high in the trading range, the tight trading range from 12 to 14. You're buying kind of smack in the middle of the overall trading range, even high in the trading range. So it's really not all that good to be buying above 14. So I don't think I would take it. Disappointment on 15. Bears see 15 as essentially a low too short breakout pullback from 11. But I don't think it's all that good. Big tail on the bottom. I think if we were going to go down, you would have gotten, good follow through for 11 or good follow through for 7. The Bears have had a couple of reasonable chances to go down today, and they really haven't taken advantage of them. So I overall do not think that this is going to be, a bear trend. Follow through for the Bears on 16, but it's really not ideal. It's got a big tail on the top and a tail on the bottom. So what does this look like to you? Does this look like a leg in a trading range, or does it look like a bear trend? Looks a lot more like a leg in a trading range to me. So you trade it like a leg in a trading range. I think that the traders who, traders might buy above a bar like 17, right? It's a double bottom with 14, or you could argue triple bottom, 12, 14, 17. And, it's a wedge, 1, pullback, 2, pullback, 3, but you're still buying in the middle of the tight trading range. So if you're taking a buy like this, like above 17, you need to realize you're buying in the middle of a tight trading range, and you can't have a tight stop here, or I probably wouldn't even have a stop here. I'd have a stop somewhere further down, knowing that you're buying in the middle of a tight trading range. And that's why you get outside down disappointment 18. Reversal up 19 is a double bottom with 13 for the bulls. Bears see it as a pullback in their bear trend, in their channel, at least here. And bulls see a reversal up and a wedge double bottom. Do you buy above 19? I think you can. It has a tail on the top of the bar, which is disappointing. If it closed strong, I would have taken the buy above 19, but I instead personally waited for 20. But I thought that it was okay to take the buy above 19 directly or just buy above 20. I suppose I did take this trade and I made money on it, but I suppose I should highlight the dumb thing I did today too, if I'm going to talk about the good thing I did. I bought 12. I bought pretty small because I wasn't super sure, and I put a stop below it. And as I put the stop below it, I mentally thought, I thought to myself, I said, I don't think I should have a stop there. It should probably be a measured move down. And I wrote that in my notes, and then sure enough, I should have had a stop measure move down. It was a small position, and I'm not really comfortable scaling into trades, so I didn't end up doing that, and I just took the small loss and just got out. But I think that, in the future there, probably smarter to just have a wide stop if you're going to take a buy above essentially a doji bar after this, because I knew this was strong enough for 2 legs sideways to down. I guess my big problem was I didn't recognize the goal of buying above 12. I even said that to myself. I was like, I'm not really seeing the goal of this trade. And, that's a really good thing to do is when you're taking a trade, you have to be thinking about the goal of your trade. When I bought above 20, I thought it was a wedge. We're probably going to get at least 2 legs sideways to up, and we could get back to the 10 low. So there's your goal of the trade. And you can, keep your goal in mind as it's going, and your goal or premise essentially might need to change at some point. But, here I probably should have had a wider stop and just look to scale in if I'm going to take that kind of trade, but I'm not comfortable taking that kind of trade, so I should just be sitting out here. But anyways, 20, follow through for the bulls. I think you can buy above 20. It's a good buy. It's a smaller bar, and it's just basically the same price as buying above 19. It's 1 tick worse, but it's follow through for the bulls, so a lot of bulls will buy it. More follow through, 21, 22. Good for the bulls, but this, was relatively strong, and we're probably going to get one more leg sideways to down. We are at the top of this lower trading range here. You can see this lower trading range, and 22 reaches essentially the top of it. 23, about a 50% pullback, maybe slightly more, tick or 2 more. And you can see bulls are willing to buy the 50% pullback. And then 24, a bull bar. If you were watching during 24, you'll see that 24, basically the first thing it did was traded up to the 22 close. And when it touched the 22 close, it sold off immediately and then formed this tail. So I thought that when you see 24 forming and it touches the 22 close and sells off immediately, it means that the bulls who bought the close at 22, disappointed 23, maybe scaled in around 50% pullback, were selling out of their longs rather than adding to them. And that can mean that the market's going to, reverse down. But what it can also mean is that if you get a bull close on 24, you now have a lot of bulls who sold out of their long and they're now trapped out. So when 24 closed strong, I thought that the bulls who sold out of their longs are now thinking, I thought we were going to turn down, but instead we might, get another leg up. So they'll be forced to buy at the market. And that's why, we got this channel, I think. Disappointing follow through on 25, big tail, but probably buyers not too far below. You can see buyers directly below on 26 and a reversal up. More follow through 27, 28, 29, but big tails on these bars. But you notice that this is a really tight channel from 18 to 30. Essentially, it's really tight. So we're probably going to get a second leg up overall from the channel. And the reason the tight channel is important is because it's a breakout on a higher time frame of some kind. You notice we get back to the 10 low and start to find resistance. I think once you get up here, you kind of got to reevaluate. Or once you get up here, you kind of got to reevaluate. Regardless of where you bought, what you're trying to do. You're probably going to get a breakout to the upside at some point, but we could get a fairly deep pullback first. And it's just there's not much left to this. I mean, this isn't the strongest trend. There's big tails, so there's probably not very much left to this. And additionally, it's 1 pullback, 2, and then pullback 26, and then 3. So it's a couple legs up. We could easily go down for a little bit. So I think getting out directly below 30 is probably the best move, or a point or two below 30. You get out during 31. 32, a reversal up. If you're, technically always in, you can buy again above 32 and hope for the breakout to the upside and some sort of measured move, maybe up here or something like that. But I think difficult to do. And then you get disappointing follow through on 33. So the traders, you can see they bought here, they're disappointed, they're scaling in, and they're starting to sell out 33. They're selling out again 34. So I think pretty hard to stay long. Outside up surprise on 35 for the bulls, but big tails on both sides. Not all that ideal. Is it a buy the close bar? I think you could make an argument for buying the close of 35. And if you get a bear bar, just get out. So you would get out below 36 if it had triggered. You'd end up out below 39. But you're hoping essentially if you're buying the close of 35 that you're going to get a measured move up of this, and you're going to go somewhere up here. But you get disappointing follow through on 36, so you might just get a second leg up. And I think the second leg up was 37 and 38. Inside bar 37, so bulls bought the close of 36, trying not to let it trigger, and they were successful, causing 37. More follow through for the bulls on 38, so maybe bulls bought the close of 37, hoping that we were going to at the start of a rally and they were going to get in at a good price. But traders end up scalping out, and we get a reversal down 39. Why did traders scalp out? Well, we're in the middle of this, and there was kind of a lot of resistance areas here. You can see we touched later in the day this close, which was a reasonable buy the close bar, but those traders got trapped and they never got out around break even. And you can see they got out during bar 58 today around break even. And I thought that this close was also going to be a magnet, and we ended up racing right through it. When stuff like this happens, when you have important magnets, I thought this could be considered a pretty important magnet since it was pretty good by the close, technically. And when you race right through it, it always makes me wonder if we're going to have to come back and test this price. So I'll be interested to see if we come back down and test this price at some point, over the next, week or two, and see if we just oscillate around this 49.33 area. Anyways, 39, outside down, surprise. I think bulls exit below 39, and that's the main cause of 40. Bulls get out below 39. You get a big bear bar closing near its low on 40, but a big tail on the bottom. So do you want to sell? Probably not. I don't think, it's technically a sell the close bar, right? Because it's, 39 closing near its low, 40 closing near its low. So you have follow through, it's sell the close 40. But it's really not, it's just not ideal. If you were gonna sell, I would wait for a third bar to make the market clearly always in short. Or I would look to sell, a pullback and then another reversal down. That 39 and 40 are strong enough for a second leg, and that they're probably going to make the market get a lower high at some point. Because generally when you get really strong pair of bars or a couple of really strong bars, you can expect a lower high. So disappointing follow through 41. Some traders might exit above 41, but it's definitely okay to still stay short. Bad follow through for the bulls, 42, and then you get 43. Bears were hoping 43 was going to close on its low, trigger the high one below 42, and we were going to start the sell-off. I thought there was a reasonable chance we got a sell-off today, but we ended up getting bad follow-through. Just looking at yesterday's high. We blew right through yesterday's high too. Interesting. I suppose that was right around that by the close bar. But anyways, also, a lot of times you could argue this is essentially a failed breakout of the 18 bar range and a reversal up. Like I say, or Al says mostly, when you get a failed breakout of the 18 bar range and a reversal within 5 bars, a lot of times traders will take that. And so I think that was a lot of what was happening on 19 and 20. 43, but you can see ends up being disappointing. So the traders who sold, on some time frame, these were the closes of the bars were all the way down here. So you could argue that it has to test all the way down to the 40 low. And you can see on 43, when it does test down to that 40 low, all the traders that were selling were disappointed in this, and they're now getting out around break even. And what you instead want was those traders to be selling more, but they're getting out. So disappointment, traders disappointed in the close of 43, buying back their shorts, causing 44. 45, it's a low two short below 44, but it's a bull bar, so I don't think you want to sell that. Disappointment, 45. A bull bar, 46, but a tail on the top and the bottom. You get a surprisingly good bull bar on 47, but, how high are we really going to go? I think if this is going to get a second leg up, we're probably going to go a lot more sideways first. And 39 and 40 were strong enough that I'm still thinking we're going to get a lower high. So although 47 is strong and 48 is good follow through, the reality is 38 was a buy the close bar. We might just be getting a vacuum test of that. And that's exactly what it was. So 49, you can see we tested that close. You could argue that it's, spike 1, pullback 2, pullback 3. So 3 pushes up. And it's a sell below 49, betting on the lower high, but it never triggers. Inside bar on 50. Do you sell 50? If it triggers, maybe, but it's no, you don't sell 50. I'm just talking. 50, you probably do not sell. It is 3 pushes up and it is an inside bar, but wait for follow through. Disappointment, 51, traders selling above 50. And then inside bar 52, double top, 51, essentially double top, 49, lower high. And bears were hoping for a reversal. I thought there was a real chance we started to get some sort of reversal down today. One thing I noticed was the day was really small. 15, 14-point days are really rare. So I thought the day would, it might grow, and it could do it to the upside, but I thought the downside was realistically possible too. But the bears need to get a reversal in relatively soon. And then you get 53, a bear bar, but a tail on the bottom, you're right on the moving average. So it's really not all that good to sell below 53 or sell the close of 53. And you get disappointing follow through 54. So traders, they see 53, think maybe, okay, I'm not selling 53, but if 54 is a bear bar, any sort of good bear bar, then I'll sell that. And then you get a doji on 54, and those traders start to exit, causing 55. And then the remainder of the bears give up above 55 and don't look to sell again for a couple legs sideways to up. And then you start getting good follow through 56, bull bar closing near its high, an okay buy for a swing, hoping for a breakout above the wedge. Follow through 57, a tail on the top. So maybe the upside might be a little limited, but it's still okay to buy the close. And you can see 58 touched that close that I mentioned and started to find sellers. So the bulls who got the close, maybe they held all the way. They scaled in somewhere down here, and they're getting out around break even. Inside bar. So I think the most bulls will exit below 58 if it triggers, but bulls buy the close of 58, and then they get 59. Inside bar high 1, technically a buy. Follow through on 60, big tail on the bottom. And then more follow through 61, but 62, 63 doji bars. You can see this whole rally, it started out kind of promising. 58 was a bit disappointing, but it started out a little bit promising. But then you can see tail, 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 and then a couple doji bars, so not all that good. I think traders exit below anything. I think traders exit below 63, which is why 64 closed reasonably strong because bulls were exiting. But then you get 65, and always in bulls are buying again above 65. I didn't think there was much left to this move on the upside. I thought we might go a little higher, but I thought we were going to go mostly sideways for the rest of the day. So that's why I left. And then sometimes, you just get surprises. There's no real way to predict this this late in the day, especially with the context of the daily chart. But, big surprise, 67. And then you get a bull close on 68. And getting a bull close on 68 increases the odds of a measured move. When you get big surprises, you really want to get a close in your direction as follow through. And bulls get that on 68. So that's huge. A lot of bulls start buying the close. Doji bar 69, meaning the buy the close might come to an end within a few bars. But this is so climactic and big that, we could still rally. And then you get big follow through 70, 71, reversal down 72, but not all that good. Bulls probably have to exit below, I would say 74. Let me go sideways the rest of the day. For stop order trades, probably 20 was the best on the day. And you could have bought these closes, I think. Maybe these ones, but you're getting pretty high up. 56, maybe. 56 probably good. 57 by the close. Probably still buy the close through here, but getting kind of bad. And then buy the close. Good bull bars. So yeah, I was just kind of thinking about, always in on this day, kind of tough. Once you get 3 or 4 bull bars, probably always in long, but can be difficult on trading range days to determine the always in. On the daily chart, good follow through for the bulls. We're pretty overextended in the short term to the upside, but it's a tight channel in the weekly chart. Again, more follow through for the bulls. I think we're going to get a pullback at some point, but I want to talk about the monthly chart since the month's almost done. We're obviously going to get a third strong bull close here, right? That's what's going to happen. But I think that the next bar is going to be a bear bar. So I think next month we'll have a bearish close. And I think at some point we're getting back to at least this high and probably lower. I'm really concerned with these three bear bars. They're not three strong bear bars, but there are three bear bars, which is usually too much for a pullback. And this could easily be a wedge, one pullback, one pullback, two. You could argue two, but I would argue more one pullback, two, pullback, three. This might be resetting the market cycle, and we're probably going to need a second leg up, but we could definitely get a pullback. And I'm just not sure. I'm just not totally convinced that we're going a ton higher yet. If we get another good bull follow through bar, then fine. But I think three bear bars, maybe we get three bull bars, and then that's that. So I'm not. This is obviously very strong, and we're going higher. But my question becomes, how deep is the pullback going to be? And yeah, that's the day.